Andrew, thank you so much for being with us. And I'm really looking forward to chatting about the housing market, not just here in the UK, but also in the US. But starting with the UK, house prices have actually been pretty resilient through the course of the pandemic. Despite all of the economic uncertainty and the trouble that people have faced, we had pent-up savings and low interest rates supporting the housing market. Now, with the cost of living crisis front and center and rates rising in the UK, how much longer can this, fairly resilient situation persist?
Yeah, I think you're absolutely right to say that those factors that supported very strong demand through the pandemic are now starting to turn, particularly, as you say, with the cost of living crisis. People are starting to, I think, run down those savings. But the key one really, I think, is rising mortgage rates. Mortgage rates in the UK, at least, hit a record low only last November. And we're only just starting to see the impact of the rise in mortgage rates starting to affect the market. And I think now in the leading indicators, you can see that price growth is probably going to slow, maybe grind to a halt by the end of the year. That's certainly the message from sort of the buyer inquiries measure, which is now in negative territory, suggesting that rise in mortgage rates that we think has got much further to go as well is starting to cool things off.
Andrew, I was going to ask, what is the leading indicator we should be watching? And it sounds like the buyer's inquiry rate is maybe the one. And I ask this because at the beginning of this week, we saw a plunge in construction stocks in the UK and home builders and also construction companies in Europe. And it seems to have come on the back of this warning from the insulation maker Kingspan out of Ireland. They warned of a major deterioration in market conditions, depending on how the economic situation evolves from here. Why did that warning alarm investors so much?
Well, I think there's quite a lot of sort of residual optimism in the construction sector at the moment. I think normally what we see is that when I think as well as seeing mortgage rates rise and our forecast for house prices to fall a bit, what we often tend to see at the same time is a big drop back in housing starts. In fact, sort of sales, which are obviously falling in the US and are probably on the turn in the UK and starting to trend a bit lower. There's a really good relationship between transactions in the overall market and how many homes house builders are delivering, because they want to deliver as many homes as they can without dragging down sort of the local market prices where they're building those homes. And when there's a less buoyant market, less sales overall, that's when we start to see obviously sales drop back. And I think now it's starting to become clear that this sort of pullback in demand is going to end up leading to less transactions. We're already seeing them obviously fall in the US, and ultimately that's not good for house builder volumes going forward.